Hello, everyone. I hope you are having a wonderful Memorial Day. And if you're watching this before you're doing any festivities, I hope you enjoy it. And I hope you're at a place where you're actually able to enjoy Memorial Day with family and friends. Don't forget that. Today, we're going to be talking about this phenomenon of the stock market. Really, what is going on in this stock market? Why is it acting the way it is? Because it is one of the craziest markets that I think a lot of people have seen. And we're getting new updates every day about what kind of recovery are we expecting right now for the U.S. economy. And there's many different opinions as to what to expect with this, but for the most part, most are going to be expecting a 63% here expecting a slow, gradual U-shaped, so slowly getting back to where we were. And by slow, we're talking 2021 is where you're looking as far as that's concerned. So we're in a weird point in which we kind of have two different markets going on right now. It is weird to say there's both a bear market and a bull market at the same time, but frankly, there is. It kind of just depends on the sector right now, because there are those companies that are getting hit hard by the current pandemic and those that are absolutely thriving because of it. So today I'm going to lay out some ideas for investment for the future. And by future, we talk about short term. If we're looking long term, several years out, 3 to 5 years out, any of these picks that I have here for you, I think are going to be good. But if we're talking about what's going to maximize your gains for the next year, I have some picks for you as far as what I believe. So just a simple comparison, obviously, too, between the Dow Jones, down around 15% on the year, and the NASDAQ, which, guess what, is in full bull city, up 2.5% this year. That's right, the NASDAQ is up, the Dow Jones is down. And you want to know why? The NASDAQ is relatively tech heavy. These are the type of companies that aren't quite as impacted. So there are kind of some sectors that many people want to stay away from right now. We're talking short term. These are businesses that are going to get hit very, very hard in the short term. Obviously, most notably are going to be your cruise stocks, right? Your Carnival Cruise, your Royal Caribbean Cruise, or your Norwegian Cruise Lines. These are companies that have faced massive losses this year. 71% downward movement for Carnival Cruise. And in the past month, where a lot of stocks have seen pretty good gains, there's not much going on here. 11%. I mean, there's not much massive recovery going on with these stocks even. Investors aren't buying these yet. And there's a good reason. They won't be buying for a little while. We're going to expect a lot of garbage earnings for the future. The only way we really will see recovery in these stocks is, frankly, if they find once a vaccine is created, right? Because investors right now are moving their money out of these stocks and into other ones. Now, I think long term, if this company can survive through this, it'll be a great pick. If you would have picked it up at these levels, you'll be pretty happy 3 to 5 years down the road. But then again, the thing is, you don't know for sure. This is just a rough situation for these. We're going to expect a full year of very bad earnings for Carnival Cruise. And overall, that's going to devalue the stock. Other sectors, such as clothing retailers, these are the non-essential retailers. I put Nordstrom in here as one of those because it's been hit very hard. Nordstrom down 61% this year on the year to date. So crazy. If we're talking even a month out, it's still down a month out. They saw a little bit of recovery, but, shot right back down. So these non-essentials are ones that have been hit very hard because of the fact that, a lot of these big hedge funds that control the market, they're not interested in getting in these companies. They don't know what the demand looks like for these companies as far as their in-store merchandise goes, right? Are people going to be flocking to clothing retailers after the economy starts reopening? It's a good question. A lot of people don't know that, and I think that's why investors are staying out of these stocks. Now, Nordstrom down the road, I think it's a good pick. Long term, definitely 3 to 5 years, this is a good pickup price. No doubt. But in the short term, you're going to be getting hurt. And you also talk about real estate investment trusts like Simon Property here. Definitely one of the most notable ones, down 62% this year. This is a company that owns a lot of the malls that really are in this country, especially the high-end malls. in the United States. And all these real estate investment trusts have been very hard because of the idea of companies defaulting, right? These are malls or really the tenants who aren't able to pay for their rent. So that means Simon Property's not making the money. So that's why these stocks are sold so heavily. The fear is that people that are renting with this company, Simon Property, or other real estate investment trusts, that they will go out of business. Could be anything. So that's why investors are staying out of these stocks, and they likely will for a little bit. Now, malls are starting to reopen slowly but surely. I don't think investors are getting in these stocks until we see some recovery as far as actual payments on these rents and mortgages. That's my opinion on the matter. So we need to talk about what is the winning formula right now. And I think it's obviously vague just to say tech is the winning formula. I've got a couple different ideas that I think are really going to be winning formulas. So one very notable thing about this pandemic is that it has really just shot us forward into the future quite quickly, faster than on the path that we were going. We were obviously moving pretty quickly on our trajectory into the future as far as just where we were headed as far as technology, stuff like that. We were headed there quickly. Now, this helped us move even quicker. So we talk about tech. Obviously, you talk about companies that have big exposure to the future of technology, right? A company like Nvidia is one of the most versatile tech companies that I believe is out there. We talk about their data center. We talk about their autonomous vehicle segment. We talk about, obviously, just their gaming segment. Well, their data center is growing massively. Obviously, this is the future. Really, these data centers, cloud data, obviously massive for the future. And that's why you've seen these stocks really just kill it. I mean, year to date, this stock's up big, 50.5% here. And there's good things to go with Nvidia too. So when you think of Nvidia, we talk about a company that's been consistently growing revenues year over year, quite consistently here. You see from 2017 just consistent growth, and we also see just good numbers in general. And to the point where analysts even are expecting next year, this current year, they're expecting 20% growth. Next year, still a positive 16% growth as well. These are companies that are going to continue growing even through this pandemic, where some companies are going to see 60% of what they saw last year. A company like Nvidia is actually gaining momentum from this. And even positive EPS lines, right? We talk about an EPS this year expected of Nvidia of $7.59, and next year expected of $9.13. So this is a company growing both on a profitability standpoint and on a revenue standpoint. Next year expected to get $15 billion in revenue in comparison to the 11.7 they're putting up on a trailing 12-month basis. So high growth expected for these companies even through these pandemics. And with that high growth, it means investors will be buying these stocks. These big hedge fund investors are going to be betting on these stocks, and that's why they're going to go up. Next, we talk about gaming, Activision Blizzard. We've seen the biggest month for gaming recovery in the past 2 months that we've seen in a long time, right? And Activision Blizzard, I think, is really on a good forefront of it. They've got a lot in terms of mobile gaming with their King business. Mobile gaming is going to be massive. Obviously, with people having more time on their hands, really just trying to escape the madness of the world right now. I mean, I'd say it, but the fear-mongering of the media, the just cruel facts of life right now. People are trying to escape it, and they do it through video games. We talk about Activision releasing stuff like Modern Warfare. We talk about Blizzard with World of Warcraft, and we talk about King with mobile games. And then we talk about, finally, Major League Gaming, something that likely will take a big spot here in the future as we continue to progress. So, very interesting for video game companies like Activision Blizzard, or potentially even Take-Two. If we continue along the tech route, I talk about my favorite tech company here in Facebook. They're very well diversified, extremely well diversified. And this is a company prepping for the future. We're talking about more employees staying and working from home. This is a stock at all-time highs, obviously. Very massive year-to-date. A company that's up really only 12%, which isn't massive. But as far as revenue is concerned, it's a rapid grower. I mean, this is a big grower, not just a shower. This is a grower. Revenue massively growing. Expected this year to grow 10.4%. Next year growing 23.9% as far as sales growth is concerned. They're expected to do $96.7 billion next year. And they have so many aspects too. We also talk about the fact that they just continue to print money. This is a company that makes profit like no one's business. Average EPS estimate of $9.81 for next year. This year expected $7.57, so that's big growth in EPS. It's a company super well diverse. We talk about Oculus, the number one name in virtual reality gaming, which is obviously the future of gaming. And I think it's pretty obvious that that's just the case. And Oculus being at the forefront of this is pretty interesting. Their technology is just better than everyone else. We talk about the Facebook platform, obviously still a platform growing. Instagram platform, still a growing platform. They introduced shops on both of these platforms, so it allows people to buy products from in those apps, directs them right to it. They get revenue from the companies. They get revenue from ads. My gosh, when we talk about ad recovery, and ad rates will recover next year, absolutely. This company's going to do so well because they're getting an even larger user base because of the pandemic. More people are going to be spending more time on social media. It's just how it is. And if they like the platform, they're going to be sticking to it. Instagram, WhatsApp, Facebook, they've got it all. It's a company super well diversified, and they're going to do a great job. Very well. So, and let's be honest, this one might be a contentious one when we talk about retail, right? I'm bringing retail to this, even a brick and mortar retailer. And a lot of people might shun me for this because brick and mortar, why would you mess with brick and mortar retail? Well, a company like Target or Walmart, really. Walmart I like simply because of the recession proofness, right? Target I like because, well, first off, it's down 6% year over year, or really year to date, I should say. But it's a company really well poised for the current environment. And I say that because of the fact that this is a company with digital really in its name. Digital focus is everywhere with this company. It is a company that in the past quarter grew online sales 134%. In the month of April alone grew 275%. Wow, that's crazy. And that's not including just their in-store pickup. That's including online delivery. So just think about the fact that this is a company that is already growing that massive customer base in digital in the retail sector, and they are just going to continue to grow that because the more they impress customers, the more they'll continue to grow this online sale, and it's going to become a thing of the future, right? Some people might not go into a store nearly as much if they realize everything they need can be gotten online, and a lot of people didn't think about it, but this, again, as I mentioned, it progressed us very quickly, quicker than we were before. I think Target's a good pick, consistently growing in terms of revenue. And through this, they're posting 10% comp sales growths. In-store traffic not as heavy, but that online is massive for them. Online growth is big for them. And it's going to be big for them in the future. Target is at the forefront of really just successful retail, no doubt. We also think about work from home, right? A lot of companies now are going to move to a work from home type environment, not only boost online retail, but think about those companies that benefit from work from home, right? We think about Logitech, the number one supplier of computer accessories. People need webcams, they need computer mouses, they need headsets, they need keyboards. Logitech supplies it all, right? Logitech can supply every single bit of this, and as more people are building their home office, Logitech's going to play a bigger part in it. They posted a good quarter last quarter, and this next quarter coming up is going to be pretty big as well. A stock year to date has seen growth because of it, up 18.4%, right? This is very nice. And I think there's still positivity to go with this stock. Work from home also includes, that's right, a stock that's been relatively neglected here in HP. HP, a company down 18% through all this. They're kind of at a great spot. We think about competitors like Dell as well. When we talk about desktop sales, they will be up. When we talk about laptop sales, they will be up. The work from home movement is really going to be coming fast and furious. We see companies like Facebook doing it. A lot more companies are going to do it just because, well, this is the perfect time to try it. This is the perfect time to see what it can benefit the business for. So work from home is going to be more important, and HP is going to be doing a good job supplying that. Now, long term, I have my own thesis on this company. It's why I'm holding it. But in the short term, this should be a stock that I believe outperforms the market. The broader market, for the most part, we're talking Dow Jones as opposed to the NASDAQ. I think the NASDAQ as a whole is just a fine place to park your money. Park your money in an index that follows the NASDAQ or in a fund that follows the NASDAQ, and you'll be pretty happy. But regardless, these are my ideas for investing right now. As far as companies that'll be good, this is really just to kind of push you into looking at some of these companies and looking for ideas like this. Because if you talk about short-term gain, I think there's a lot to be gained here, right? I think there's a lot of good companies. Long-term, I think there's so many good companies right now that are very cheap that you might consider buying. And those three I mentioned at the start, really these sectors that are down so hard are probably going to be good picks later on. But please do your own research with this. Please do, and I hope you enjoyed.